Hello traders, it's Samurai Trader. Welcome to this video, Futures, Forex and Stock Trading for Beginners, Part 1. In this particular video, I'm going to be going through a lot of basics of trading, what you need to get up and get running. Now, I'm going to ask you, which I know many of you won't do this, but stay to the end, because what I promise to share with you is some of the golden nuggets and the critical information that you really need to succeed in this business. Perhaps one of the biggest injustices to many traders, potential outstanding trading careers, is they'll spend more time planning a weekend trip away than what they will planning their day trading career. You've got a potential of financial independence for life, but unfortunately a lot of traders, they get sold on an ad they might see on YouTube or in the newspaper or online that this is easy, you can get into it and make your fortune within a month. This is just not so. I'm going to be showing you what steps you really need to take. Now the great news is it's cost you pennies in a dollar. You don't have to spend a fortune mastering the art of day trading. So stay to the end, spend the next 30 minutes or so watching this video, because I'm going to go through markets to trade, trading platforms to use, and a whole lot more. So as I do get underway, first of all, I do need to pull up the disclaimer. There is a risk in trading. Don't trade with the rent money. If you've got the trading account ready to go, fantastic. Trade on the simulator until you're consistently profitable. But better still, pause the video and read the disclaimer. You don't want me to read out this full disclaimer. Now what you can do, of course, click on the link below and you can get hold of my free training manual. And I've also got another free ebook you can obtain, The Truth About Day Trading. So please visit my website, or you click on the link below, I believe. So my marketing people tell me, and even better still, make sure you subscribe to my YouTube channel. I've got hundreds of videos on YouTube where you'll be able to be kept up to date with my latest material, and even better still, become a member for $197. By the way, this is only a very quick plug and then we'll get on with it, but $197 you get 15 of the world's best day trading and swing trading strategies. I've been doing this now for over 26, it's now nearly 27 years. I've amassed a mountain of training material and dozens of different strategies and ideas which I cover in my course online. Anyway, go and join, or better still, visit my website and request further information so you'll be able to find out a lot more. Okay, that's the end of the ad. So let's get into this. First of all, I want to talk about the financial freedom that you can realistically achieve as a trader. Now, at the moment, we're going through the coronavirus crisis globally. We're seeing millions losing their jobs, and more people are looking, what alternatives do I have when it comes to trading? Now, what that has also done is had a massive effect on the markets, whether you be trading Forex, futures, or stocks. We've seen massive volatility, and the requirements from brokers has also gone up. Yes, stocks have come down in value, but if you're going to day trade stocks, you still got the $25,000 account rule, or the pattern trading rule, where you've got to have 25,000 in your account. So yes, what I'm going to show you, of course, works brilliantly on stocks, kills it. We've got a lot of stock traders, but also absolutely kills it for Forex traders and for futures traders. Now, what you want to do when you first get going as a trader, you want to start off with a small account. Now, because of the increased margin requirements right now and the volatility, the ideal account is really $1,500 to $1,700 to open an account with the broker, and we're going to talk about brokers in a moment, but that's the ideal account size. Now, when the volatility settles down in the next few months, you can drop that down to about $800, but right now, because of extra volatility, now I won't go into all the reasons, you want to be trading what we call higher time frames. Now, based on a $700 account and not risking any more than 2%, we call it the 2% rule, and earning only $50 a day, within 14 weeks you're up to earning $1,000 a week. Within 30 weeks you have the potential of earning $10,000 a week. Now, all I ask you to be is to be open-minded at this stage, traders. Okay, just be open-minded to the possibility of this, because as I said in my opening email opening slide here, what would you attempt to do if you knew you could not fail? Now, I'm going to be sharing with you in coming episodes some of the results being achieved by some of my members. It's very easy for me to say, okay, here's what I earn, but that's me. But what about you as a new trader, or perhaps a struggling trader? So $1,700 is a great amount to start with. Now, as you build your account, this is, by the way, for the experienced traders here, this is trading the micros. Now, you want to move away from a micro account as soon as possible to trade a standard lot, and the best way to do that is when your capital increases to around $7,000. So you start off with 1,700, you keep leaving your 250 in, you start to trade multiple contracts as you double your money. Okay, so you're not compounding it as far as increasing it recklessly. Before you can start trading 2 contracts, you've got to go from $1,700 to $3,400. This is very conservative. Now, once we get to the standard contract of say $6,000 or $7,000, you can see here within 14 weeks you can be way up there earning, where is it, 18 weeks, let me get it right here, the potential of earning $10,000 a week, and that's earning $200 a day. Now, we've got a setup called a 2B. It just kicks butt day in, day out. It's a trend following strategy. Now, what if you said, look, I've got the account size, but I think I could only do 100 a day, or I feel really comfortable. Well, this is what we call scalping. If you scalp at just $100 a day with a $6,000 account, you're up there at earning $2,000 a week within around week 25. 13 weeks, you're up there at $1,000 a week. 25 weeks, you're up there at 2,000. And yes, it'll take you a while longer, but up there at week 44, you're earning you'll have the potential. Let me put that in, because some people just go crazy about that. You've got the potential of $10,000 a week. That's only on $100 a day. 100. I'm going to show you how to do that. Now, here are the key considerations that we've got. You know what, a lot of people here, I actually removed this slide, but I'll put it back in. You know, a lot of traders, as I mentioned earlier, they get sold on the dream, and you know, if they're just not willing to put the work in. And the only place in the world where I know success comes before work is in a dictionary. You need to gain the screen time. And that's the beautiful part about trading now, with the trading platforms that are there, which we're going to have a look at in a moment. You can trade on the simulator as long as you like until you get this right. But the fact is, so many would-be traders are not willing to put the time and effort into mastering the art of trading. But the great news is, traders, this is not rocket science. It's about pattern recognition. It's about learning the tools of your trade that you use, your trading platform. But so many traders, they want to get in, they want to start live trading within 2 weeks. A lot of it is because of a gambling mentality, or because of a income requirement, and they've just got to get earning money. Well, guess what happens? It usually doesn't work out. So let's get into this. First of all, this is a business. You've got to treat this as a minimum of a 90 to 180 day internship. Do this, traders, and you will succeed in this business. Okay, treat it as a business. You know, don't use standard notepads where you've got bits of paper flying everywhere. Go and get yourself spiral binders, and you'll find out a lot more about that in my program. But it's very, very important you look at the right time. The next thing is acquiring the knowledge on how to actually day trade. Now, whether you become one of my students or not, whether you go down the road of self-discovery, self-learning, it really doesn't matter. But take the time. Okay, it takes time, and what you want to do is cut through the chaff as quickly as possible to get to what does it really take, what knowledge do I really have to have, which are the right setups, etc. So take the time, do your research. Next one is having a trading goal. So important that, as I showed you on those spreadsheets, and my members actually get this on an Excel spreadsheet, and I show you how to actually set some goals. You then print it out and you set a goal. It's so important, because you show me a person with a big enough why they want it, and I'll show you a person that'll find the how. So have a trading goal. Next thing, of course, is your account size. Realistically, you want to have $1,000 or more. Now, there's one advantage with trading Forex. You can trade what we call a micro account on Forex, which is 10 cents a pip. There you could get underway with just a few $100s. So you can do some things like that to gain the real type trading experience. However, even still, you'd start trading on the simulator and then consider going live. These are essential steps that you must take. So you want that sort of $1,000. Money management, risk management. Now this is where we never, ever, ever risk more than 2%. And I still see the amount of garbage, and that's at your maximum, the amount of garbage that day traders and traders are told, oh no, you can risk 5%, no problems. Traders, you may as well go on a holiday, you're going to lose your money. Okay, please don't be insulted by some of what I'm telling you now. I'm just giving you the factual information here. You can never risk more than 2%, and as your account grows, you want to drop it down. For an example, if we go back to this table here, and you get over here where you're earning $200 a day per contract you're trading. Okay, so over here you got the potential there of earning $100,000 a week there on 100 contracts, trading 100 contracts, earning over $5 million a year. Now realistically, are you still going to run at a 2% risk? Now on a $6,000 account, okay, that means you can risk $120 a trade. We typically have got an $80 to $100 risk. That's typically in a normal market conditions you're risking. But no, you wouldn't. As you build your account, you lower your risk from 2 to 1.5 to 1, and eventually down to 0.5. Now yes, you'll have a slightly, well, let me say a lower return on your equity, but you'll be in the business for the next 20 or 30 years. You will become wealthy. But everyone seems to want to gloss over this. Picking the right market to trade. Every market has its own personality, and when we look at markets to trade, let me quickly bring this up for you. At the moment, there's a great market that came out last year. Well, I say a great market, a great new contract called the Micro Minis, which is a futures contract. Now on the left here, and this is a little bit off screen. How can I get this over? I don't know how. Can't get it over. But anyway, here we've got the standard NQ. You've probably heard of the NQ market, the NASDAQ. This is the standard contract, and this is the micro contract. Now if you trade this market here, it's what we call $5 per tick, or $20 a point. There are 4 ticks or 4 movements to a point, $20. With the new micro, it's only 50 cents a tick, or $2 a point. So it's 1/10 of a size. And look at it, it behaves virtually, it's really exactly the same. We've all heard of the ES. The ES is $50 a point, which is 4 $12.50 ticks. Now the micro, you can see over here, virtually models this. Look at this, see this? Virtually every movement is the same. And this is now $5 a point, or $1.25 a tick. So you can start with these smaller contracts, and that's why you only need that $1,700. What if then you've got $20,000 traders? And I've got a lot of wealthy traders that I train and that are members. I've got now over, I think it comes to about 9,000 members globally. Well traders, it comes down to this. Even if you've got $20,000, go and invest $14,000. Okay, go and open up an account, start with a micro, build from there, and then go to the bigger contract where you need 6,000 or 7,000 depending on market conditions. So you'll see that in another video, where that can vary. The margin requirements can vary subject to volatility of the market. So you still want to start off with the micro and earn the right to go from here to start trading the big contract. I promise you traders, you'll be in the business long term. Now, I won't go through all of these, but you've got treasury notes, you got the standard equity indexes, you got energy, the crude oil, the black gold, the Texas tea, which is $10 a point. Huge market, and a great market. You've got the Forex futures contracts, which are fantastic because it's very, very low commissions, and they model the standard Forex market, and there's many benefits in trading those. You've got agriculture, you've got metals like the yellow gold, okay, gold, which is $10 a point also. So we've got a whole range, and then you've got the European market. Now I apologize, you can't quite see it over there, but I think you're getting the general drift, traders, that there's a ton of options there for you when it comes to markets to trade. And yes, I train traders in what I know are the best markets, because what we look at the personality of the market, and yes, they do have their own personalities. What we want is a trending, reliable market. You don't want a market that spikes all the time, that's unpredictable. Very important. The next thing is your broker. I stay absolutely neutral when it comes to brokers, and I don't recommend brokers deliberately because so many brokers send clients to me. But what I will say, you want to make sure that your broker is a fully regulated broker, such as licensed in the USA, Australia, or in the UK. The USA now are probably the strictest when it comes to broking, because what we've got in the US now is with the CFTC and the NFA, they can actually log in to a broker's account at any time to check the segregated accounts and their account balances. Okay, so they're very strict there, which is great news for the consumer, for the client. And ASIC in Australia is very strict, and same with the UK regulator. So you want to make sure you get the right broker. Now do your homework. Okay, spreads, if you're trading Forex, are very important. Excuse me. And of course commissions. Now with, say, NinjaTrader as a broker, who also have their own trading platform. Now NinjaTrader is one of the best commission rates there. It's well under $4.50. TradeStation, who I've been using for over 20 years, is brilliant. Then you've got AMPS, AMP futures in the US, fantastic commissions. All right, some of the lowest I've ever seen, and many clients with them. And these are not broker endorsements. I'm just giving you some background. So take your time. If you're in Europe, make sure you Google the broker. Really take some time in finding the broker, but make sure that you're with a regulated broker. The next thing here is our charting platform that we're going to be using. Now when it comes to that, traders, this is really important, because if you're planning right now or in the short term or long term to be a professional trader, whether you be trading professionally part-time or full-time, because in this business we earn a full-time income trading part-time, we've got to have the right trading tools. Now there's many different charting platforms out there. Now TradeStation 9.5 and 10, I've been using 9.5 for years, and nearly all my clients do as well, use 9.5. Their very latest platform is 10. NinjaTrader 7 and 8, similar sort of thing to 9.5. 8 is their latest version. Both TradeStation, NinjaTrader, outstanding professional platforms. So is Sierra Charts, multi-charts. And my understanding is that many years ago, the guys that originally wrote the language, the easy language it's called for TradeStation, sold it off and then started multi-charts, and language is very similar. If you're going to be trading Forex, MT4 is still the most popular. There is an MT5, but MT4, and it's free. Typically you can lease TradeStation. Look, I won't go in the pricing models, there are so many, but the big thing is, traders, don't get caught up with that you need to spend thousands of dollars, because some trading platforms are systems within themselves, and they say, look, you've got everything here, but that'll be $16,000, thank you, or that'll be $5,000. You do not need to spend that sort of money, traders. You really don't. Okay, but you do need to have the right platform. So not necessarily in order. I've got probably more clients now with NinjaTrader, but TradeStation, NinjaTrader, Sierra Charts. If you're trading Forex, MT4, Then you've got multi-charts too there with amps. You can get multi-charts. I think it's free through amps. And Sierra is part of a broker. I'm not exactly sure, but I've got a lot of clients seem to be coming on that have got Sierra. And then you've got the real classic standard brokers trading platforms, which are very, very basic. Now, if you're just doing a bit of swing trading, etc., that's probably fine. But if you're going to start doing some serious trading, you need to have a serious platform. That's absolutely essential. Now, the next thing there is your data. Now, Forex data is free with every broker that I know of globally. But when it comes to futures data, no matter which country you are in the world, whether it be the UK, Europe, the US, Australia, really doesn't matter. You've got to pay for the data. And that can vary from a couple of dollars a month up to, you can spend, I think I spend about $90 or $100 a month for all the exchanges that I subscribe to, and I get the data through my trading platform. Okay, and TradeStation then takes a fee. So you've got to make sure you got the right data, but you do have to pay for that in most cases. Now, the trading chart timeframes, and this is where it comes down to your personality. Many of my clients, including myself, we are what we call scalpers, in and out, in and out. And when you're scalping, a trade may last seconds, it could be minutes, it may go for an hour. And then you've got what we call day trading, where you might be in a trade, it could be 5 minutes, it could be half an hour, it might be all day, but you don't hold overnight positions. And you've always got a combination of the two. And then you've got your swing traders that are holding for a position maybe a week, etc. Because some traders are just not cut out for doing short-term trading. The huge advantage of short-term trading is lower time frames means what we call a smaller stop loss, and you're able to scalp the market. You don't hold positions overnight. You've got a lower risk. So there are many benefits, but it comes down to working out what or which will suit you. And then that leads us directly into the chart type, whether you use a time-based chart, a 1 minute, a 5 minute, a 15 minute, a 1 hour, or then you go to what we call tick, range, Renko, and volume. So these are things you need to find the time. Now, of course, all the old timers, now you can say I'm an old timer, okay, I'm 60, but many of the really old ones, okay, they used to use, and that's all you really had as an option, was using time-based charts. But there are massive benefits when you start using tick, range, Renko, or even volume. And there is a range of other different types of charts out there. I love Renko and tick. The combination of the two is incredible, which you'll learn if you're fairly new. So there's a great combo there. Now the next thing is the indicators. And let me tell you, traders, the best things in life are truly free. Now what I've just done here is just put up my live chart here. And so what we're looking at, just let's go and have a look. Here we go. So we're looking at the ES right now. Okay, so this is the ES, and this is a Renko chart. Let me just expand that out. So this is what we call an entry chart. This is my main trading chart, and as you can probably just saw before, I had two other higher time frames. I like to trade in the direction of a higher time frame. So you wait for the market to pull back, and then you trade back in the direction of that market. Now, what I was going to show you, and what I will show you here, is the amount of indicators. Now, as I mentioned, I've been in this business nearly 27 years, and I have hundreds and hundreds of indicators, trading systems, strategies, methodologies. Many I've bought, had designed, or had written for me. And let me tell you a little secret: the best things in life are free. Many of my indicators are just standard indicators with just my customized settings. And so don't get hooked on that you've got to spend a lot of money on indicators, because you don't. Virtually every good trading platform, whether it be Show-Me's, whether it be paint bars, or standard indicators, the best of the best things are free. They really are. And so we see here my moving averages. I've got moving averages here. I've got a stochastic. This is called a 2 smooth. You can just simply use a standard stochastic. Here I've got a MACD, which I like for my divergence, and all of these you can get for free on a standard trading platform. The only thing is my little white paint bar there, which, well, as you can see there, it picks turning points really well, is that I've got it customized for 2 or 3 different platforms. But you know what all it is a pattern that even if you've got a platform that I don't have a super scalper coded for, it's very, very easy to learn the rules. Why does that plot? It doesn't plot until an uptick above that second candle, by the way. All right, I've got to have 2 candles down, 2 candles up, 2 down, 2 up. All right, and there's a couple of other things that go with it, rules to make it work, but it kicks butt. I call it the super scalper, and you can use it on any time frame. But what I was trying to get across there, it doesn't matter which platform you've got, because even if I don't have it for your platform, you can simply just learn the pattern. It's very easy. And that's the other thing, traders, is to have the confidence that yes, you can do this. You know, so many traders, it looks complicated at first, and as I say to trader, it's just like learning how to drive a stick shift, or what we call down under here in Australia a manual motor vehicle. Okay, at first you've got to push in a clutch, you've got to use the brake, the accelerator, you've got to look in the mirrors, you've got to turn the wheel, change the gears, you know, but within 30 days you've got it down pat. And this can be like a new language to many people. Okay, so if you're new, or even if trading has not been kind, and I should have perhaps said this to you right at the outset, and this is so true, you know, so many traders are just not taught how to trade correctly. And let me just quickly show you what I mean by that. I have what I call Curly's Law. Now, Curly's Law simply says, do one thing. Now, you may remember Curly out of that great movie. He was Jack Palance, actually, called City Slickers, where Curly said to Billy Crystal's character, do you know what the secret of life is? And Curly then held up his finger and he said this, and Mitch said, your finger? Curly said, one thing, just one thing, you stick to that and the rest don't mean shit. But what's that one thing? That's what you've got to find out. Now, you may be thinking, Ray, you've had me up to now, but what on earth do I mean by that? When it comes to trading, there are so many different trading methodologies, strategies, ideas, indicators, etc. It's so important that you start learning one strategy, one methodology, and you build from there. Now, over 70% of the traders, as an example, that come to me are experienced, and about 30% are brand new. And occasionally I'll have a member say, or a potential member, look, you say one thing, but how come you got 15 plus strategies? I said, well, you go, if you're an experienced trader, and as you gain experience, when you own a strategy, an idea, you add to it. So it's really important that you understand what pullbacks and trend continuations, and they're the strategies, by the way, you want to start with. You must trade with the trend. Now, getting back to this, and we're going to come back to this very briefly, and that comes down to your trade entries, trade exit, and trade stops, the type of trades or the type of trading that you're going to be doing. Now, there's a fantastic book called Trend Following, How Great Traders Make Millions in Up or Down Markets, and there's another one equally as good, and perhaps in some ways better, by Robert Miner, called High Probability Trading Strategies. Now, what is really important, traders, is that you learn to trade with the trend. So the dark blue line represents the higher time frame. You only want to trade when you get a pullback and a continuation trade. You want to know how to master the art of day trading in the shortest period of time? Just do that, and the rest don't mean shit. It's true, traders. Yes, eventually you want to understand how to trade divergence trades. That is when the market starts to roll. But so many traders want to pick market tops and bottoms when they first get underway. In fact, in New York City, there's a great firm there called SMB Capital. And Mike Bellafiore, he's written 2 great books. I recommend them to everyone, called One Good Trade, and his most recent one, which he wrote about 8-9 years ago now, and his most recent one is called The Playbook, the inside look at how to think like a professional trader. Now, they've come under some criticism because he promotes his firm and prop trading firm, and yes, they're an educational firm as well, but the point here is there's some great information in his book, particularly The Playbook. Now, what he talks about is that most of their traders are profitable every day, 89% of the time, and some of them he's got traders earning $1 to $5 million a year day trading. Now, most of their trading is on stocks, but there are 3 basic reasons for their high level of success. They developed a skill set over time that allows them to get in and get out. They develop pattern recognition skills, and they're in the right stocks or the right markets. And if we look at one of the setups of G-Man, who's one of his best traders, we'll look at his first one here. It's trading with a trend. He's simply waiting for a retracement, a pullback, and then what we call a trend continuation. That's if he's going short, or if he's going long, the same is true, but just the opposite. He's waiting for that pullback and a trend continuation. If that fails, he will then take a second position, and he's been stopped out of that, and this is his most favorite when this has failed, because he's got a larger spot to go to his target. So what is this? This is a trend following strategy. These are the best of the best you can trade, trading with the trend. So trade entries, then you've got breakouts, a whole lot of other things, but you need to clearly understand these. The next thing is the hours allocated. It's very, very important, traders, that you put the screen time in, and you develop the skill set in front of the screens, practicing what we call deliberate practice. Now, what is deliberate practice? Well, it's no good just sitting back and looking at the screen and watching the price action tick up and down, etc. What's important, traders, you be thinking, and what can I learn from this? How can I improve my entry? How can I improve my exit? Where's the ideal exit? Where's my ideal stop loss? How can I improve this? These are all compelling, growth orientated questions. Then you've got, of course, a lot of traders use very destructive questions. It's why do I always lose money? This won't work. It's just skepticism. You've got to have that growth minded. Now, and just very quickly, there's 2 types of mindset which we know scientifically. You've got the fixed mindset type person, never wants to be wrong, knows all the secrets to life, and then you've got the growth minded person. Well, look, I'm open-minded to it, I just might need to verify it, and that's mighty fine. Go and verify it, but at least be open-minded to the possibility. It's so easy to become skeptical, and then our mind is closed. So we're 33 minutes into this one, so I've given you a very quick rundown, and the next video I'm going to start going through some different types of strategies, because what's really important, traders, is I mentioned well, first of all, Curly's one thing. Okay, you start with one strategy and you can kick butt. For example, we've got a setup, it's called the 34B, and there's another one, they work hand in hand really, the 34B and the 2B. You could trade those the rest of your life and never do another thing. Just trade the 34B and the 2B. How long do they take to learn? If you're a brand new trader, realistically 30 to 60 days you'll have it, you'll be able to see it in your sleep, every setup. I'm just giving you some realistic time frames. If you're an experienced trader, yes, you'll pick it up in a week, but for newer traders or those that have perhaps been struggling, you've got to give yourself that time frame. That's so important. So traders, please make sure you visit my website, subscribe, better still become a member, and I'll see you on my next video. Thanks, traders.